Good afternoon. It's Friday, March 16th, 2007. This is Brian Shannon speaking from Alpha Trends Blogspot. The markets are closed for the week, so let's go ahead and take a look and see what happened here. We had the big sell-off on Tuesday, and let's take a look at this weekly chart first. On the Qs, the Nasdaq 100 Trust, we've kind of been looking at this bigger picture level of this resistance from last year, around 42.5 or so. It was tested as support back in here late last year in December as well. And it looks like the market's struggling to hold on above that level. So for now, it looks like the 42.5 level is the key support for the Nasdaq 100. And looking at the daily time frame, you see that's where that sell-off was on Tuesday. And today was a very quiet session. Yesterday and today were both very quiet for the Nasdaq 100. The Qs lost 7 cents today, 0.16%. If we take a look at the 10-minute time frame, you see that we had that recovery on Wednesday, and it's just been really quiet chopping around in here. Options expiration was today, and we did see, though, lower high and lower low in here, so then a higher low, and just really mixed. So you can't really take anything away from today's market in the Nasdaq 100 as far as I can see. Nothing meaningful there. We were thinking that maybe getting above 43.10 would see a test of the 43.35 level. But again, the daily time frame, guilty till proven innocent. We've got the 10-day moving average below the 20, which is below the 50. They're all declining, so that puts the burden of proof on the buyers in here. Continue to be very defensive. I'm going to come up with some stock ideas this weekend for you. But the real story today, I think, was in the S&P 500, which lost 0.7%. The spiders were down just about $1.99 here today. Actually, $1 even. So the weekly time frame, you can see it was much more bearish. We had a bigger sell-off in there, but still kind of trying to hold above this 138 or so level. On the daily time frame here, it's just looking pretty vulnerable. Real feeble bounce in there. I mean, we had the nice intraday recovery on Wednesday after the bigger sell-off, but just volume drying up once again. It's acting vulnerable is the way I look at it. And again, we've got a declining 50-day moving average, so burden of proof is on the buyers in here. No reason to try and be aggressive on the long or short side. We saw that the market rallied up to that 5-day moving average, which is declining, so we give it the benefit of the doubt to the sellers on this time frame as well. And the market sold off from that level today. If we look at the 10-minute time frame, you see that a little bit more clearly, that this declining 5-day moving average was couldn't be pierced yesterday intraday, and this morning we saw a gap lower, tried to recover, but then they sold it off again. So we might be in for another test of the lows in here sometime next week. It's not really giving us much reason to be bullish. I still think it's very likely that we will see the 200-day moving average tested in the near term. That's down at about 135.30, so we could still see a few more percent on the downside. Continue to be very defensive in here and take it on a stock-by-stock basis, I think, is the best way to go for now. The mid-caps on the weekly time frame, you can see they're still struggling with this 149.5 level. Still holding above it, so that's good. We've got all these moving averages on the weekly time frame heading higher. When we switch to the daily time frame, we're getting a really mixed picture. We've got a 50-day moving average advancing, a 20 that's declining, a 10 that's declining. So I think it means you've got to be very careful in here. On this 30-minute time frame, you can see that the declining 5-day moving average acted as resistance for this market as well. And that was also this prior level of support from right before it sold off. So the market sold off, recovered up to that level where the sellers took control, and the sellers took control once again. So I think that it looks like we're probably in for a test of this 148 level, and as you know, the more times that support is tested, the more likely it is to fail, particularly when we have lower highs. That tells us the sellers are getting more aggressive price-wise, and if we're to test it early next week or so, we'll have less time in between those tests. So that tells us that the sellers are getting more aggressive time-wise as well, which makes a breakdown that much more inevitable. I think that 145 looks like a pretty fair place that I think you could see this market sell off to. We've seen this resistance back here become support, test that level again, maybe bring it a little bit lower down to the 200-day moving average, shake some people out down near 143, and then that could set up the case for a better recovery. But right now it's just not convincing, the bullish case, that's for sure. Semiconductors are still looking like neutral on the daily time frame, as they have for more than 6 months. This 30-minute time frame looks more troublesome, though. Lower high in here, we had the same thing where this prior level of support started acting as resistance. This is yesterday's support. But this market is just not really acting good. So let's take a look at those quids again, the QID. Looking at this, on the daily time frame, it looks bullish. We've still got this resistance level acting as support. And on the 30-minute time frame, though, it just looks like a mess in here. Might, you know, if it breaks down below there, though, that could make the case for a double top, which would be bullish for the Qs. So it'll be interesting to see what we get next week, in particular after today's quiet expiration for the Nasdaq. And I'll check back in this weekend. I'll have some trading ideas for next week.